Hey everybody, good morning. Good morning, good morning. We got channel members Gaten Dawn, Rob B, Lieutenant Colonel Goose. Holy cow, haven't seen you in a coon's age, it seems like. Scott, Will, Craig, Donald, Arturo, Hugh, Gary, Ted, Cliff, Aki, Mark, Sledge, Captain Sledge, Svenborn, and other people like my favorite subscriber, Kimberly in the house, and Doug, Gilbert, Ed, Cohen. I think I said that right, maybe. Let me know if I didn't. Bill, Larry, good to see everybody. Nancy, Pat, hey everybody. So, we think we've seen it all, right? Maybe. We've ridden out the dot-com bubble. We've surfed the crypto waves, great financial crisis, you name it. We've even seen a meme stock or two go incredibly crazy and then come back to reality. If you're a savvy investor, you've got this. We've been around, we've seen this for a while. But what if I told you that one of the biggest brains on Wall Street is basically saying we're about to jump in the DeLorean and travel back to the 1970s? Now, I'm not talking about going to pick up some bell bottoms or a disco ball, but for soul crushing inflation. I've been talking to Goose about this for, gosh, what, 2 years, Goose? This is probably coming back around. The political meddling in the economy and the stock market. We might see this go on a truly wild ride. The best parts, now this analyst thinks the S&P is going to go nearly double in the next 2 years. So buckle up, Buttercup, because we're about to dive into the mind of Bank of America's Michael Hartnett once again. Let's call it a bold prediction for the future of all of our portfolios, possibly. So let's talk about the magic number, 9914. Write it down. According to Hartnett, that's where the S&P 500 is potentially going to be headed by 2027. 9,914. Now, that's an insane number. That's 50% jump from right here today up. The market can't possibly do that. And I'm skeptical myself. But Hartnett isn't just pulling this out of his back pocket or out of a hat or out of whatever. So he's looking at history. He's saying, if you look at the last 14 bull markets in the United States over the past century, the average gain has been 177% over 59 months of run. So he's just doing the math. Simple math, right? Wall Street seems to not do simple math much, so maybe this is a surprise. Of course, simple in the world of finance usually means there's a giant fire-breathing dragon of risk sitting there that we don't see on the chart. And in this case, the dragon's name is the bond market. So, the bond market is getting a little cranky. We're seeing bond yields in the United Kingdom, France, Japan hitting highs we haven't seen in decades. The US 30-year is knocking on the door of 5%. Now, for those of you who are maybe a little new to this whole thing, when the bond yields go up, it's like a tax on pretty much everything that you do in the entire world. It makes it more expensive for governments. It makes it to build things, to borrow money. It makes it more expensive for companies to build things and borrow money. And for you to go to the bank and buy anything by borrowing money. It's the financial equivalent of your landlord doubling your rent and then asking you why you're not buying more avocado toast down at the corner mart. So, what happens when the bond market throws a big enough tantrum that threatens to break the whole system? Well, according to Hartnett, the Fed is going to step in with its magic wand. I don't have one. I don't have a wand. Gonna step in. I guess they have one, right? So, that magic wand, anybody may have heard this before. Yield curve control, or YCC. You may see that in the media, YCC. For those who like your financial jargon a little more, sounds kind of like a boy band, right? YCC. Anyway, now, what is your yield curve control? What do they do? Imagine the Fed telling the bond market, hey, you see this 10-year bond yield? It's not allowed to go above this. Like, here's the cap right there. Can't go above that. We will buy as many bonds as it takes to keep it right there. It's basically price fixing for the most important asset in the world. If it sounds a little bit like not so free market, well, you're exactly right. It's government stepping in and saying, hey, we're the boss now. You don't set the prices. We do. So this is where the 1970s come in, because that's what we did under President Nixon. He was facing an election. He wanted a booming economy. Does this sound familiar? Like starting to, like a president that wasn't really liked. By all necessarily, very controversial, I guess you might say. Facing an election, wanted a booming economy. The one we got now already did. Maybe third term. I don't know. You let me know in the comments if that's even possible. So he pressured the Fed to keep interest rates low. Sound familiar? He even implemented price and wage controls. It worked for a little while. And then the market boomed. The Nifty 50, growth stocks of the day, went to the moon. And then, well, inflation came roaring back with a vengeance. And the whole thing, well, we had a lost 14 years, I think, in the markets as we kind of ground sideways. So, how do we make money in a time machine? If Hartnett's right, we're in for a 1970s rerun or deja vu. How do you, my fellow traders, play this? Well, Hartnett has a few ideas, and they're not for the faint of heart. First off, he's saying that if you want to be long, you need to be long gold and crypto. Why? Because if a government's going to be printing money to buy up all these bonds, what's that do to the value of the dollar? In the toilet. Go down, and go down with a vengeance. When the dollar goes down, what goes up? The value of hard assets like gold, Bitcoin, possibly Ethereum, I don't know. Things that are not necessarily the dollar, all right? Gold, the original store of value. Things like crypto, Bitcoin's more rare than gold now. Digital gold, Bitcoin. Now, second, Hartnett's saying that the Fed does manage, if they do manage to get the yields under control, that's going to be great for things that are sensitive to interest rates. Think about it. Borrowing costs go down or controlled. That's good for real estate. It's good for small companies that need to borrow for growth. It's good for biotech companies that burn cash ridiculously, and they need that to develop the next miracle drug, right? So he's saying if you want to be looking for those things that benefit, where interest rates, real estate investment trusts, small caps, biotech. It's kind of a reoccurring theme here. And finally, he's saying if you want to be short things that are going to be, if you want to be shorting things, target the things that are going to get hit by the government's attempt to whip inflation. He's pointing his finger at utilities. Why? Because electricity prices are going to start to soar. What's the first thing a politician is going to do? They're going to talk about price controls. That's not exactly a recipe for a successful utility right there. When your price controls and when your price you can charge your consumers are under control, yet your production costs are out of control. So there you have it. A trip back to the 70s, courtesy of Wall Street's top minds. If he's right, the S&P, we could see 99.14. If the Fed is about to go full-on command and control with the bond market, who knows? But it's a story. It's a narrative. And in the world of investing, sometimes the story is more important than the numbers. Sometimes. The charts don't lie, though. So, what's the takeaway for you? my trader friends, is that you don't get complacent. You don't assume that the next 10 years are going to look like the last 10 years. The world is changing. The rules are changing. Things could change drastically. And the investors who place themselves in the right place with the right plan are the ones who's going to benefit from all of this. Those that think outside the box, those who are willing to maybe place strategic bets on a little bit of history repeating itself. And hey, if all else fails, at least we could potentially break out the bell bottoms again, right? They're bound to come back eventually. Thanks for watching, everybody, and we'll jump into what's moving today, if you don't mind. Yeah, I got the red monster there. Dun dun dun. All right, let's pop up the disclaimer. Jump over here. Jump over here. How you doing, Rungamer? So, all trading involves a substantial risk of loss, no matter what I say. Well, no matter what I predict, I make predictions. Sometimes they come true. Sometimes I get lucky. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos. If you trade them, you might lose money. If you desire personal financial advice, hire and consult a financial advisor. If you want somebody to tell you what to do, hey, Sergio. Hey, Robert, Jim, Seth, Kay, Diane. Good to see you, Ray, Mary, Frank. Glad you're here. I don't know what the heck that was. All right. S&P. Where do we go from here? So, quite honestly, we have a bullish pattern. Not mincing words about it. We've got a bullish pattern. This is a bullet, like, now, there's that. There's the market open. So we had this high. We had this low on Friday. We've got this retrace, and we're sitting right on the 618. Came up, and we're just parked there. Turn down. We get at least a third leg down. I don't know. But we hit a higher high. So, correction wouldn't be all that unexpected right here. Wouldn't be. Goodness, can't even click the chart tools for all the alerts popping up this morning. So the next move down, if it's just corrective, we're going higher again. We'll probably come back down to 64.15 area, possibly as low as 63.91 or 63.90 area, somewhere right there. If we got on down in the 63.60 area, we might get further downside. That's what to watch for. So important level around 64.50 on futures. Why am I on futures and not on the cash index? Because the cash index just opened and there's a big gap. So we did drop. And this is one where they do match. Did drop. We are sitting at the 618. I did bring a red monster, so watch out for the downside today. I threw him in the fridge, and that's the one that was on top. I didn't plan it, didn't anything. So I was like, days I've avoided just grabbing the one that's on top just to try to fool the market. Hadn't worked out so well. Oop. I made a trade. Cha-ching. Alrighty. In Q, same top, same pullback, same level here. Looks like we might go cruising through, though. Yeah, we're above the 618 on that one, sitting there consolidating. Now, jumping over, grab the calendar. Dun, 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 dun. Let's see if it's listed on. It's not listed on here. They're supposed to restate some numbers tomorrow and Wednesday. And then CPI comes out on Thursday. PPI comes out. Oh, what do they do? Push that off. Interesting. Oh, where's PPI? PPI out? Wednesday. So PPI is in front. That's interesting. Yeah. PPI is in front of CPI. That's usually not a great sign. And then retail sales is not the next day. Where's retail sales? They pushed it out to Tuesday the following week on the 16th. Right here. Oops, circled Canadian stuff. Forget that. Right there, retail sales. Right in front of the Fed decision on the 17th next week. Fed day right there. Market's actually pricing in 3 rate cuts this year in 2025 before the end of the year. 3 rate cuts or 0.75 cut, and then 3 in 2026 for another 0.75. Bring that down minus 1.5. Unless they do that yield curve control stuff right now, that's looking like a correction. It's a higher low so far. Now, it's overlapping too. Kind of corrective. I don't know. We cut a 1.5. 4.3, maybe 3.3, 2 point. We'd be back down here. 1.5 down. Long term. Still elevated, but back in the better zone right there. That's still where we had COVID problems. Still a ways away from zero. I don't know. I don't think they can cut. I don't think they will cut below the market rate. So keep an eye on this DGS2. DGS2 breaks on down. Like, I guess right now, DGS2 has provided the room that they could easily do a 1/4 point next week. Possibly even a 1/2 point. Be a stretch, but possibly. That put us right around in between 4.75 and 4.5. No, 3.75 and 4. Sorry, 3.75 and 4. Be right in there about 3.83. I don't know. I mean, I look at that price action. I'm like, that looks a lot like DGS2 might pop. Dun, dun, dun. We don't really have they've let it decouple before. And they cut into it here in the 90s. Jump back in here. We don't really have the history back before that, but there's what went on a tear. We had some big swings. Ran it up, ran it back down, ran it back up. That's volatility in the rates right there. Whew. Trying to get that inflation under control. Fortunately, I think we're potentially going to do this again. Anyway, NQ just sitting. Russell, same pattern. So same pattern across all 3 indexes here. This one looks like we're going to break on out. And on the daily charts, this one set up the potential to go on out to 2,600. If we lift off, that would be the target right up there. S&P, just in case you have forgotten, Still looking for that 65.60 target up here. Doesn't mean we won't get a small pullback before that, but oil. Interesting. OPEC, despite a glut in supply, has decided to increase production for now. Sounds like we may push prices down. If they get down in the 50s, should be interesting. We're back down at that kind of support level. If we break through it, could push it easily back down to the 55. May do a little bounce action there before we push on down. Somewhere in the 50 area. 50 is kind of what I've been expecting for a long time. 49.50. Gold pushing on up. Be careful. This looks like we're going to hit 3,700 right there. M2 money supply climbing again in an aggressive clip. That's inflation. Inflation drives the price of gold and Bitcoin higher. That's the path I outlined last week. So far, staying on the path. Right there. No changes. Ethereum, so far, holding on to the gotta hold level. Gotta hold. So far, so good. So in case you weren't here, in case you haven't paid attention, this is the gotta hold level. That low where we tagged it. If we're going to remain bullish, we got to stay above there. Any daily close below that level, big trouble in Ethereum land. So we need to break back higher here. Get some enthusiasm going on up and keep going. The upside sets us up for a potential. Nothing's guaranteed ever, but a potential up in this neighborhood right here, above this red zone. And that would be the long-term expansion, 61, 6,200, right up in there. So this was a big red flag, though, when we turned down. So if we break down here, easily run back down to the 35, maybe even 3,300, right down here. Ethereum. NKD pushing out with some vengeance. There's a regime change cooking in Japan. Seen as bullish for now. Might get us the juice to push up into that 49 to 50 level. Dollar. First target down right here. If we get down to here, we're probably going to retrace and get extension lower. Apple. Golly, man. Still doing pretty much nothing. This is like the least amount of movement I've seen on Apple in a long time. It just reminds me back here. Last September. I mean, it's making a move, but it's not like... Apple, usually you can count on some swings for trading, but this is just kind of dull. Still has this big, we haven't voided the big potential second wave down. We did one of these, potential to do one of those. And you may be like, I don't think so. Microsoft did it over here. We didn't do it, we didn't break higher. We big flush, came all the way back up there, and then big flush again. Then after that was done, we did a big rip. So Apple might need another flush before we can do a big rip. Amazon, same situation. Now, if we break on above this gap down, probably going on up to 257, possibly 271. Google kind of did that, filled that big gap, and off to the targets. Yeah. 263 might be the next upside here. On Google. Meta. We back tested. So this is one of those, like, if it fails here, we back tested the breakout. If it fails here, quickly coming down here probably, and potentially coming all the way back down to the prior low. If we can hold this breakout level, that's the next upside target, and then that's the one above that. So 840 and 979. That's a long way up. We may do this. Ching, ching, ching. Like ping pong it like that. Microsoft coming back down. Going to retest the 489, possibly back to the breakouts, similar to Meta at 468. Nvidia keeps eroding. May come back to the breakout test at 152, 153 area. Tesla pushing on through. I saw this in the pre-market, spiking above that high. If we can stick the landing here, sets it up to push on up. Target up there, all the way at 450 area. Netflix finally tagged the 618 Friday. Sets up the first move down, similar to what I talked about on Amazon and Microsoft and Meta. First move down, second move down. This one last did it right over here. Back in March, April. Probably do it again. All right. I go through and pull everything moving $2 or more up in the pre-market. Put it on the gainers list. $2 more down on the pre-market. Put it on the decliners list. Hunt for some opportunities. I bring some setups, some stuff with my signature pattern already in place. List is like 12 today. Some interesting names like Yeti, Pins, ASML, Glyph. Interesting names. We can dive through those if you hang out. We'll get to those in just a few minutes. So, popping through, looking at app. App has a big upside potential. We can rock and roll here. Now, I kind of wanted to see it pull back from one of these levels to kind of shoot us on up, but doesn't have to. Doesn't have to. Rappaport Therapeutics, launching off. They must have some kind of drug information. Biotech, be careful. Ford. It's interesting. Ford Industries. So this has a reverse split, and that disqualifies it for me from trading. I wouldn't touch it. Wouldn't touch it. Sats. So I'm not sure why this would be bullish. Cutting a deal with Starlink to sell off a large chunk of your proprietary spectrum. You know, the spectrum you bought from the FCC, and cutting a deal with SpaceX and Starlink to sell it off, and it gets you more cash, but what are you going to do with that? Like, you just gave up your advantage. So we'll see what happens there. Not sure that's extremely bullish long term. I mean, it's kind of like saying, hey, we have the secret recipe for chicken sandwich at Chick-fil-A, but we're gonna sell that to McDonald's for umpteen bajillion dollars. So what are you gonna do after that? I mean, Octo Holdings. It's got a reverse split in there. Danger. Danger, danger. 2x on app. If you think app lovin's going to the moon, here's a way to play. EME. Yeah, doesn't even have a roadmap line. Careful. Hood. Not on the list, but Hood getting added to the S&P. I guess it is on the list down further. Announced on Friday after the close. Target's right up here at 140. UNH. Breaking the pattern. So resistance right here. Around 360, 370. Baidu. Wow. Nice pop. Still corrective. Just cleared off. So we have this first move up, retrace, and we're still in a corrective spot. It's very similar to like how I was outlining Apple on the downside. Except the trend on this one. So Apple, the trend is up, doing a correction. This one, the trend is down. Won't first move up, second move up. We hit the 1272 extension of that. That could be a correction. So trend, pullback, correction, continuation. Guess which way? Down, down, down is the potential. GE Veranova, big move, dollar-wise, but still likely to come on down to the roadmap line. Oracle. So first move down, bounce, next move down, potential. Let's see, turn off the magnet. And so resistance right here, about 245. Watch for that second move down. Oracle. Yeah, will put us right into the roadmap line right there. If we do it, doesn't have to. None of them have to. It's just my best guess based on watching thousands and thousands and thousands of charts. It's like this one right here. Move up, retrace. Probably going to come on up to this area at the minimum, if not on up here. Gets us right in there. If not, yeah, this is the bearish level, and this is the more bullish level. Reddit, come on up, 269, 308 upside, TRU. Oh, man. Let's see what we got cooking. Here's the low I'm interested in. Here's the high. We did tag that, so if we get continuation, that's not saying it won't pull back. We could get another pullback in here. Could come down. So support right now, 77 upside potential. Up here around 174, 227 area. Baba. In the land of danger, be careful. Eslon. Solana, ETF. This is pro shares now, not not BlackRock. There's no giant liquid options available here. So be careful. But you can buy Solana just in an ETF right here if you think we're gonna pop it off. Solana. They don't. It's cool how they don't have an all-time history. So looking at this pullback right here. Big if we can keep going, 340, possibly 400, right up in there. If we're going to take Solana out to new highs. MCRB and biotech with a reverse split in here. Danger, Will Robinson. Vive. Man, we didn't hit the roadmap line, so pass for now. AVGO coming up on that 363 resistance. Watch out. Can bring a pullback, or at least a sideways consolidation for a little bit before we pop the next 536 up there. JNUG being ridiculous. I'm just going to warn, like, be careful. Chasing gold and gold miners. We've gone exponential. Need a pullback. to help go higher again. The nature of the next pullback will help me point out where we're going to go. But if you want to stay long, that's cool. That's on you. But just zoom out a little bit. We're not breaking out here on Nugget. JNUG also not breaking out. GDX looks better. Crazy highs. GDXJ also looks crazy. So be careful where you're playing. That's the takeaway here. It's also going exponential. Next layer up, 115. But it may come back. It's a heck of a move. Watch out for the pullback. I don't think we're done yet, but I also I think it's very, very likely that we see a pullback. We could hit 70. We see that. Just be careful. I pretty much took off all the NEM I had as we hit this. First move up, retrace, second move up. As we hit that, I took it all off. Had some riding. I liquidated a bunch of it back here. Added it back here. Liquidated some here. The rest of it here. Pull back. Be careful. Now, if we pull back, if we get another one of these, could be an opportunity to grab it for the finality move in gold. What are they? They're gold. I can't remember. Barrick. B. Just B. They keep changing the freaking ticker on this one. And be careful here too. About to get to a bullish level, but be careful on that one too. Roku. Kind of stuck sideways here. We're into the highs. If we're going to continue being sideways, it could flush back down. XXRP. Not playing. XRP may have topped out. Like, it may have already played its hand this cycle. Be very, very careful. It does not have to go any higher. That may have been all she had. So be careful on that one. AEM keeps hitting ridiculous levels. QS. Coming up, resistance right here. Now, think about this a minute. I know some people left already. Think about this. It's my job as what I do is to warn you of the pitfalls in your ideas. All right. I'm not trying to convince you to GTFO, liquidate right now, but I am trying to point out levels where you may be wrong or places you can target if those levels get exceeded. All right. So you have to make your own decisions. You can't just bandwagon. What am I doing? I trade very strategically right now. And for those that haven't seen it, we're looking at 24, almost 25. Actually, I think this. Let's see. There we go. 25,000 this year on this account. Now, I'm in some docu shares. Got upside calls sold against them. I'm in some Chewy upside calls sold against them. I'm selling some puts on DLTR. Selling puts on IBIT, but I also have some shares. So that's Bitcoin, Dollar Tree, kind of in somewhat boring stuff, you might say. Been selling puts on Gap. Got shares of DJT, been selling upside calls. So there you go. This is available on K-Info. If you want to see what I'm trading, what I'm actually doing. I talk about lots of stuff, but here's what I'm actually trading right here. All right. You see the performance this year. There's the profit curve. I started tax day, basically. How you make money in the market? There you go. I'm showing you. Do I have losses? Sure. I rolled that forward. It was funny. I rolled this contract forward on Friday and then got paid 97 cents for that one. And just like 3 hours later, closed it for 36. I was doing I made a mistake actually closing it. I meant to leave it open at 36. I set up a roll order just to see. I was gonna roll I was testing out to see how much premium I could get if I went from an 84 strike down to an 83 strike. How much more premium is available, right? Well, the only way to really tell what the bid ask is to create a live order. So I created a live order. I wasn't going to send it to the market and final. I just wanted to create it. So I clicked the button to create the order so I could see the live pricing. And for whatever reason, my finger twitched. I double tapped and sent it to the market and got filled instantly. So I'm actually at the 83 strike now on Docu. Crap happens. Got paid more money to do that, but gave up upside potential. But Docu pulling back today, so no big deal, right? No big deal. I'm sitting up here at 83. Docu's retesting the roadmap line, might fill the gap. Yeah, maybe I found the bid ask, or maybe I got screwed and lost. Since I got filled instantly, that's the thing that always scares me. Like when you get filled instantly, that means you could have gotten a better price. More than likely. Market's saying, I'll take that deal. That means somebody else can make money off of whatever you just did. Or somebody else thinks they can make money off of whatever you just did. Now, there's certain, like things like futures, you just get in or get out. That this is not universal. But if you're trying to do like a spread order or rolling order or something like that and you get filled, that means you left money on the table. Scares me. Scares me when I get an instant fill on any options play. Chewy has earnings this week coming up on Wednesday morning. Can't remember. I think some accounts I have a 44 sold, and some I have this in multiple accounts. I have hundreds of shares of this. I'm at 44 and 45. Pretty sure. 44 and 45. If we pop through, I'll get called out and miss the upside to 50, but it's been a fair grind here. I sold the 61.50s for this week, which is right at the lows there. This can continue going higher, make some money. Market giving up a little bit, but hadn't turned red yet. Curse the red monster. T-Mobile. 1, 2, 3. There's that perfect ABC correction right there. First move down, retrace. Second move down, beautiful. Proportions on it. Ooh, got a little deep, but it's okay. Touch the roadmap line. Turn back higher. Get through the gap. Upside potential. This is actually bullish with the breakout here. Retrace and rocket. Potential to go lower. Well, first move down, retrace. Next move down. Yeah, potential to go just a little bit lower on PAM. Right down in here. Potential, doesn't have to. BMA. First move down, retrace. I mean, look at this. Over and over here. There's first move down. Here's the next one. Get a little coming into the support zone. Where is it? Run it from the high, down to the low, down up to the high. Right there's the zone. 43.92. If we can hold it, turn it higher, break through the roadmap line, upside potential. ARGT. First move down, retrace, second move down. This is the place I hunt for opportunities. Potentially bottoming. We can get the move back up. Charter. Ooh, that's ugly. That's probably going lower low. GGAL. Exceeded the first move down, second move down. Got a little overzealous on the move. Great place to turn and burn here. ASTS. Back to the roadmap line. Boom. I think I told Alex that was going to happen a couple weeks ago. VIST. First move down, retrace, second move down. Classic corrective behavior here. Potential to go a bit lower. Could be bottomed out, but potential to go a little lower. MSTR. Let's jump down on the time frames. I've said a lot about this. First move down, retrace, next move down. We're in the ideal spot to find support here. First move down, the retrace. We're in the spot to find support. Could go just a touch lower, 310. That's why this orange zone's here. That's also the 618 level. We hold that. Turn higher. Be good. I think crypto might be waiting on Coinbase to touch the roadmap line on the daily. Just do it. Just reach down there and tag it. It's not that far. We can go higher. I have no idea what that is. Biotech. All right, Duolingo. Oh, I must have gotten lucky there. Shoot. Dang. I didn't trade that, but that's probably not done either. 1, 2, 3, 4. This might go lower. Be careful there. It needs to do a bounce and then get a finality move. So that would look something like, usually we repeat the first move from wherever we bounce from. That bounce needs to stay lower than 311 right now. So if we were to bounce from where we are, let's just project it right about here. That can, if we bounced like this, that would project us down to here for the finality move, about 200. Wix. Wow. I don't know. That's a rough pattern right there. Looks like it has more downside to go. Potentially that's yeah, potentially complete, but looks like it has more downside to go. All right, setups for today. Lulu still has more to go. Target's still the same. Lulu I didn't see it on here at all. Didn't make any. Didn't hit the scans as a big mover in the pre-market. Still got more to go though. So ASML has this potential. Now be careful here. This is an A wave up potential, a B wave retrace. We did the roadmap bounce thing on the daily and basically hitting the targets already. But we have this bigger bounce back here. Kicking off the target up here, 852, 874. And if we do the ABC, it'd probably put us right here. I've got lots of fib lines drawn on here. Just lots of different moves. Be careful. That's the A, the B, and the C would put us right in that zone, right around 1,000 for ASML. Beam. Just looking at these patterns. 23.81 on the upside. Cliff. Here's the high. Here's the low. 12.56 potential. IMTX. Here's the high. Here's the low. $7 on the potential. KYTX. Here's the high. Here's the low. 488. Anything less than 20 bucks though may not work out, so be careful. It's a low liquidity situation. Under 20. I usually say under 10 is super low priced. Under 20, low priced. That one, 1867 target in UVL. Here's the high, here's the low. 89.28 potential. Pins. Kimberly's traded this one quite a few times. Here's the entry, 41 target. Pool. High, low, entry, 352 targets. Yeti, high, low, entry, 4150 targets. And ZGN, high, low, entry, target 977. All right, bias for the day. Careful. I think we're still going higher. Like I said, I don't think maybe Curse of the Red Monster won't play out today, but if we do tag this upside target, watch out. We can roll pretty violently right there. So looking for that 65, 62 target and support down here around 63, 65. Be careful, everybody. Count your save, maybe your own. Just to help out Douglas here, Lulu, the target getting close. 150 down there. Getting really close. Have a great day, everybody. We'll see you again tomorrow for same bat time, same bat channel, 9:15 tomorrow. We'll do it all again.